The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Merry Christmas Eve. 24 hours to go until Christmas. We got a half day in the markets right now. Markets open till 1 p.m. Eastern time this afternoon. Closed for tomorrow. We're back for full days, Thursday and Friday. Not many market participants, though. Rightfully so, right? Kids on vacation, holiday week, Christmas on a Wednesday, New Year's on a Wednesday as well. Going to be very slow, but sometimes, folks, and I'm not thinking this is going to happen until 1 o'clock, but sometimes there's a perception that when you have short days in the market, half days, very few participants, that you'll get no action. But what you have to consider is when you have less participants in the market, the masses can't smooth out some of the moves that normally happens. You can actually get larger moves with less market participants sometimes because there's not as much volume, there's not as much of a sample size to even things out. Just keep it in mind, even as you go forward on holidays sometimes, you can see actually more volatility when you have less market participants to smooth out some of that volatility. Nonetheless, S&Ps this morning, we pick things up back to a 15-minute because it's been quite a spike. Now, what I talked about market insights yesterday, right? Pretty cool that on all of these charts, we're sitting right at the 618 was the spike higher that we got. And where do you take that? But basically, that higher on Friday, and we're pushing that area yet again. We are right at the highs of Friday afternoon, which is about a 618 of this entire decline we had following the Fed meeting last Wednesday. So keep your eye on this number, 6,045, 6,050, somewhere in here in the S&Ps. S&Ps up by 12 points this morning, or 0.2%. You take a look at the Dow. The NASDAQ. We were just looking at the S&P. Look how identical these indices are, right? Right to the 618 on the S&P, right to the 618. We're just above that level. NASDAQ 100 leading the way up 0.4% right now, or 82 points. Dow slightly in the red. And as you see, we make that acceleration up to the 618, which is below that level right now. Dow off by 9, and the Russell positive by 5 points this morning. Bitcoin catching a bid. We were all the way down to 92,000 on Friday. We're at 96,400 on Bitcoin. Crude above $70. Now, I like those cheap gas prices, man. I like seeing gas with a 2 handle around here. A 2. We're at like 305, and we have decent prices in Tampa. We got a nice port here. Helps keep the gas prices relatively low. Gold contract flat at 26.28, and you jump over to silver right now. Silver up 7 pennies at 30.26, and the all-important notes and bonds, it's not stopping, folks. The 10-year, negative by 5 ticks right now, and we are coming into a yield of 4.63. 4.63%. My goodness, yields on the rise. We take a look at the dollar. 108.15 on the dollar. Even though we're peaking out on yields, the dollar, right where we were, basically towards the end of the day Wednesday, you compare that to yields, and we had the 10-year at about 108.27 or so, and we're below that at 108.10. And you look at the daily on the 10-year, and we are breaking below where we were just last month. You make the move from when the Fed began cutting, 115.23. We are now 7.5 points below that level in the span of just 3.5 months. My goodness. You take a look, and look how quickly it's going, right? This was from yesterday. We got to update that one. All right, what are we talking about? Let's update it. 4.63%. Lower price and higher yield back to the October lows of 2022. Yeah, I had to recalibrate. We're actually below that level now. That low was 108.26. We're at 108.10. The low here from earlier in the year is 107.04. And below that, all you got out here is the low of October of 23 when we had the 10-year approaching about a 5% yield. And maybe that's where we're going. We will find out. But nonetheless, yields on the rise yet again. Don't wait for higher yield, folks. That's what I would say to you. Don't wait for lower yield. Excuse me. Don't wait for lower yield, right? There's this, I remember talking to my dad even the last year or two, right, where the mortgage companies were marketing, you date the rate, you marry the mortgage, as in you only have to go through that rate that you're going to get for maybe a couple years. You marry the house, you date the rate, you can shop that rate as rates come down. Don't plan for that at all. Okay, if you're purchasing something, especially a home, do not make a purchase factoring in that rates are going to go down. Yes, they could, okay, but make sure you can handle them where they are right now, because that's where they may be. Higher for longer is in the cards as a possibility. Price with a very fair, I would say, risk reward in terms of where rates can go right now, but we're at 4.63% right now. Okay, that is a very decent rate on a 10-year basis. The market can handle that rate too. Think about that. Can the market handle rates where they are? You bet they can. We're almost at all-time highs. We're just below that level. So don't think that there is this need to accommodate to go lower. The Fed is battling generational inflation. There are lagging indicators. This market's on fire. We have a productivity advancement with AI that we have not seen since computers probably. So nonetheless, we got higher, man, and you're coming into some critical areas. You take a look at the 30-year. That's the 10-year going back. As you can see, chopping around these levels. You take a look at the 30-year, and I've had this conversation before. Let's extend this line to the right, because yes, yields look expensive right now if you look at this chart going back to 2008. But if you take this chart just before 2008, we actually look like we're cheap on yields, because we were just so biased by the fact that the last 15 to 20 years we've been sitting at 0% interest rate. Remember, that's might not be how it is going forward. Yeah, nonetheless, we get the markets. S&Ps up by 15 points right now, trading at 6,050. Let's jump around to some of the movers and shakers. I got my Spider-Man shirt on. He's got his Christmas hat attire. We're ready for the holidays. It's Christmas Eve, and let's get into some of the equities, man. We got Apple shares. Quite a year for Apple. You trade from 180 up to 255. This thing is pushing all-time highs, even as the market pulls back. Yeah, we make an all-time high yesterday yet again. And this morning, that's going to be an all-time high open, as Apple is going to open at the highest price it's ever opened at, 255.36. You jump down, man. We're talking about a company that is now at 3.86 trillion. You could get 4 trillion by the end of the year. We get a little Santa Claus rally as we fade into the New Year's. Nonetheless, how about it? Apple approaching a $4 trillion valuation. You jump over to Microsoft shares. A little bit of a different story, right? That just shows the strength of Apple. You got Microsoft off of the highs of 468 earlier in the year, off of the highs of 455 just this 456.16 to be exact. And we're $20 off that high at 435. Microsoft barely in the red this morning. Tesla shares up by another $7 to 437. You jump over to Nvidia this morning, trading higher at 140. They're one of the big stories of 2024, AI. You jump over to Google shares. The Justice Department coming after them, trying to split them up. They say, yeah, we don't care. We're going to move forward. Google pushing almost all-time highs at $200. We're at $197. They're going to open $1 higher as well. And Amazon shares trading at $225. Quite a resurgence for Amazon. We're trading at $150. Just in August, we're trading at $225, up 50% since then. All right, folks, stay tuned. We'll come back. We'll talk some equities. We're going to talk some mortgages, talking yields, right? We'll talk some mortgages. We'll talk some insurance. We'll talk some taxes in those mortgages. We'll talk some rates, and we'll talk some equities. Christmas Eve, don't go away, folks. We got live market action till 1 p.m. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got markets in the positive, all the markets in the green right now. You jump over to American Airlines. They had to ground their flights for a little bit. Look at that volatility. Yeah, this market's like, really? On Christmas Eve? Are you kidding me? Thankfully, it looks to be something they avoided. As American, down only about 10 cents. You see the acceleration of 1640. And yeah, let me pull that one up. There it is. Temporarily grounded U.S. flights, and this was at about 8 o'clock this morning because of a quote-unquote technical glitch. Imagine that, office. By 7:55 a.m., that stop was lifted. Flights and bags were boarded. Technical problem, but did not elaborate. Had to be quite a problem to ground all their flights on Christmas Eve. Think about it. Issue's been resolved. Flights have resumed. Apologized to customers. American had requested the ground stop. Yeah. Airlines routinely request ground stops, which hold flights at origin so the destinations aren't overwhelmed. Yeah, nonetheless, keep your eye on that one to see if there's any backlog from even a small glitch on American. We look to the open, and yeah, you got markets slightly in the green. You got French stocks, European, rising after the Prime Minister vows to cut the budget gap. We'll see if he can handle the political storm that erupted the last time, but nonetheless, look at the U.S. and Europe. All right, S&P 500, man, up by 25%, and the stocks only up 5% on the year. Now, you want a reason why our dollar is so strong, folks, check out this chart. It's part of the reason. It's part of the reason. As our economy chugs on, right, the Fed is worried about inflation, and our economy is growing at a robust rate, and that is going to keep rates higher for longer, and that is going to keep some dollar strength in this market, man, as it has been quite a run to the upside. All right, speaking of, this one's an interesting one from the Journal. Reading this morning. So, insurance and taxes now cost more than mortgages for many homeowners. There's multiple angles to this story, okay? Ballooning expenses is how they label this, okay? Ballooning expenses. Rewrite the math of homeownership. But I want to ask you to look at this thing with another angle, okay? And the other angle is that many people have payments on their households from not that long ago, 4 years ago you could be, right, that are far less than what that home would cost today. And as a result, taxes and home ownership take up a huge portion of that payment because you've locked in a mortgage payment where principal and interest, okay, is a very low number because you bought a cheap house at a cheap interest rate 4 or 5 years ago. And meanwhile, taxes and insurance have been on the rise, but you know what can't rise? What can't rise are your principal and your interest because you locked it in for 30 years. Share of average mortgage payment going to taxes and insurance, and you can see the steady rise. But what have housing prices done since then, right? Yeah, you're talking about over a 10-year period. It's only been a rise from about 29% to 32%, okay? But then you look at certain areas, 5 major metro areas. Yeah, Rochester, Syracuse, Omaha, New Orleans, Miami. 25% of borrowers or more spend half of their monthly mortgage payment on taxes and insurance. They have high property taxes and pricey insurance. Okay, but guess what else is happening? And these are the numbers going on here. What else is happening is that people have locked in payments. There's a good story in this as well, right? It's double-edged, and they don't focus on this, but it's what I found myself, because all you got to do is look at your own mortgage, folks, and look at your own house, right? And think that if somebody bought that house today, what would they be paying for principal and interest? Okay, it's kind of a similar story where CPI, when inflation was raging, and it still is in certain areas, certain components of the economy, but CPI factors in owner equivalent rent, right? And Florida had some big numbers for inflation versus the rest of the country at some point. And I would joke with my friends that owner's equivalent rent was what was driving up the CPI numbers in Florida, and all that really meant was anybody that owned a house had more equity than they had yesterday. So there's some numbers sometimes that twist what's going on, okay? And that, you know, it shows inflation in Florida, but guess what? All it really means is home prices are on the rise, and if you're a homeowner, that's not a bad thing. It's a good thing. If you're paying more on your home for taxes and insurance than you are for principals and interest, yes, that can be one component of the rise of taxes and insurance. But you know what else that speaks to in your payment usually? What that usually speaks to in your payment is that you're getting a heck of a bargain for whatever you negotiated for principal and interest. So think about that part of things when this come in. Think about that on CPI, et cetera, right? And yeah, when it hits fixed income, though, that's a different story. Okay, it is a different story, but what happens there in the same way? People always look at these payments. You have access to the equity of your house, okay? They talk about people who had their mortgage payment going away 10, 15, 20 years ago. Folks, if and this is where, you know, there's so many other angles sometimes when you read something. This is making the point that you have people who are in houses where their mortgage payment went away 10 or 20 years ago. That means that they paid for their house in full somewhere between 2014 and 2004, okay? And that really eats into their housing burden. Do you know how much capital and equity somebody made on their home over the last? And yeah, you can say, well, that doesn't matter. I don't want to take a, you know, it's how things get distorted real quickly. Where you say, man, you're living on fixed income. You didn't think you'd have a payment 20 years ago. Just keep this in mind when you start seeing horror stories like this, because the market can handle higher rates, folks. These are stories about people who have tremendous equity in their homes. That's what this story's about. It's both. Don't get me wrong. It is both. We got an insurance problem that's getting righted in Florida, it seems, and the taxes deal will always be an issue, okay? But think about that stuff when you read it, okay? Some homeowners questioning for higher costs, right? People bought their home in 2015. You had taxes and insurance about $725 a month. Now they pay $24.48. Well, you want to trade spots with somebody that didn't buy a house in 2015 and waited? Yeah, what have home prices done over the last 9 years? Now, I'm not exactly sure about New Orleans, but if good old Lisa and Michael Landry gave me the lowdown on their home that they bought in 2015, I'm guessing that they have a tremendous amount of equity after paying 10 years of payments on a home during quite a rise of inflation. Yeah. Nonetheless, you are dealing with that. Now, where does this reset? Well, where it resets is you finally have enough people, okay, that maybe refinance at a higher level, right? They take out mortgage payments that are more in tune with the actual cost of a home. But nonetheless, it's a big number, taxes, insurance. That's been one of the stories. I'll tell you, in Florida, I talked about it extensively, but in Florida, insurance costs have pulled back. They have, and I don't understand the fundamentals well enough, but boy, it's a welcome reprieve. I was on Citizens for a year and not on Citizens. They got private insurance that actually undercut Citizens, so something's getting righted there, thankfully. All right, folks, we're coming back, and we got 3.5 hours of trading starting right now at 9:30 when we come back for the opening bell. Don't go away, folks.
One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the market open. S&P's up by 8 right now. NASDAQ 100 barely in the green by 0.25%. 21,806. Dow, the only indice in the red right now, by barely some points, less than 0.1%, off 16 points. And you got the Russell, positive by 1. We take a look at some of the banks. Been quite an acceleration for them recently. We just back it up for the year. Look at that. Barely any pullbacks there. Quite the uptrend channel. JP Morgan kicks off the year at 170. We end at 240. Up to 254. You jump over to Bank of America. You kick off the year at 33, 34. We end the year at 44. Pretty remarkable, right? When you look at them. Citi kicks off the year around 50 and change. We're at 70 right now for Citi, and Wells Fargo. Yeah, kicks off the year at 50, and we are at 70, and you jump over. So the biggest banks, they're planning to sue the Fed over the annual stress test. And boy, you know, there's always the debate over regulations. It becomes political. But the one thing that I'm always okay with is maybe regulating those banks and making sure, because you see the demise they can have. It's absolutely remarkable when you think about the collapse of Silicon Valley Bank and some of those banks. It was within mere hours of the Federal Reserve Chairman Powell testifying in front of Congress and members of Congress talking about the need for less regulations for the banks outside of the larger banks, right? They were talking about regional banks. It was literally the conversation that was about to implode within 48 hours. And here you have elected officials making the claim to the Fed that there needs to be distinction over the stress test and the regulations for the big banks, and then a divider between the regional banks that need a little bit more leeway. I'm surmising, okay, but that was the conversation, that they were trying to hold Powell's feet to the fire to say, hey, I'm hearing from my constituents, regional banks are very important for small-time job creation, right? Small corporations, small business, job creation. Regional banks are huge in that. And they were pushing that, and within 48 hours, we had a contagion that had broken apart, and you had regional banks collapsing, okay? Why were they collapsing? Because you had banks like Silicon Valley that had grown to hundreds of billions of dollars, and meanwhile, they weren't getting stress tested to the same degree as the larger banks, and meanwhile, they were deemed basically too big to fail. So be careful of the banks in this conversation. That's the one where I try and give a little bit leeway in my own head of maybe protecting the system. The banks, you know, it's always a fine line in terms of regulation, right? Too much regulation, it needlessly hurts growth, job creation. Too little, and when it comes to the banking sector, we've seen how that can go bad, right? And you tend to, that pain is short-lived sometimes, right? We see how on the eve of problems, we'll make changes, and then as time goes, we forget about the need that we have for some of those regulations. But you're going to see it play out, and yeah, the Fed, after the Monday close, the Fed announced in a statement it's looking to make changes to the stress tests, seeking public comment on what it calls significant changes to improve the transparency of its stress tests and to reduce the volatility of resulting capital buffer requirements. Banks like that, yeah. The banks will likely view the changes as a win. They say it may be too little, too late. It's never too little, too late. Did you just see the stock charts of those banks? Too little, too late. The proposed changes are not designed to materially affect the overall capital requirements. The banks are okay with this. They've raised concerns, though, about the stress test process in the past, claiming that it's opaque and has resulted in higher capital rules that hurt bank lending and economic growth. Well, that's what they're going to say regardless. The battle's on, and you're going to see that play out as we come into the next administration as well. All right, this one's an interesting one from the Journal. Yeah, we talk a little bit market, and we talk whatever else we want to talk about, and it's Christmas Eve. It's kind of the same deal, right? Use it or lose it. That's the deal. You want to lower your Alzheimer's risk? Taxi drivers and ambulance drivers as well give you a little clue. Now, there's a couple data points. This study that they have, every study has good and bad components, okay? But you're talking about taxi drivers and ambulance drivers had the lowest percentage of deaths attributed to Alzheimer's among the more than 400 occupations. And it would make sense. You use your brain. You don't use your brain, it's going to wither away. It's like any part of your body, folks. And, you know, just keep going. You see the people who live long, right? What do? They work till the very end. There's all these stories. We hear them all the time. And it just keeps getting driven home. But what they talk about is They're constantly using navigational and spatial processing, those on-the-fly decisions about how to get to point A from point B every couple seconds. These are when you're using it prior to GPS too. Okay, you think about it. Now we're in this deal where you're just following it, not as much in the mind going on. But the way that your brain is used over the course of your career may impact the likelihood that someone develops it. Now what they're saying there is it's probably unlikely that it prevents you from developing the disease potentially, but what does it do? It masks the symptoms for longer. It just keeps you as healthy as possible. It fights off everything. Use it or lose it. The numbers were about 1% of taxi drivers and even less than that of ambulance drivers died of Alzheimer's, compared with almost 4% of everyone else. That is quite a difference. And you're talking about, okay, a study, and it was from death certificates that list occupation from 2020 to 2022. Okay. A later study, yeah, but what do I want to get to? Okay, yeah, these were the shortcomings of the study. You got to get both sides. It's unclear how long they work for that job. Somebody could have taken that job in the last 6 months of their career and then put it on there. Not likely if you're going to pass away from Alzheimer's 6 months later, but nonetheless, didn't look at the underlying cause of the disease, okay, and et cetera. But nonetheless, you put them at 1% to 4%, and they line up together, and it just makes sense going along the board. So, never hurts to be reminded that use it or lose it, man. Go for walks, right? Stay active. When you get to the point that you're feeling so unhealthy that you can't get out and walk, you got to move, man. You can't stop moving. You can't stop using that brain, for sure. All right. Let's see how we got equities moving this morning. You jump over. Amazon shares catches a little bit of lift, up by 0.8% right now. Is Apple going to hit $4 trillion? They're making a run. We're up by another 0.6%. Apple with all-time highs, a nice round number, 257 on the dot. And what do we need? We're about $100 billion away. We need about $6 in price movement from here. You're talking about $263, and Apple hits $4 trillion. I remember the numbers when we were talking about 1, 2, 3, 4. Not that long ago, we hit $1 trillion, folks, and now we are at $4 trillion. Yeah, we got a half day today. Do that till 1 p.m. Eastern time. We'll be live with the market. We get the closing bell today at 1 p.m. Eastern time, and then we're going to go enjoy some eggnog and get ready for Christmas and get ready for Santa delivering all those presents. You got it. All right, what else do we got pulled up here? Yeah, Starbucks. They got a little bit of an issue going on with the union. We check out Starbucks shares when we come into the break. We'll take a look at them as well. Starbucks shares down 0.1%. Look at the run recently, though, right? This is gaining steam, man. Watch this one. You're seeing headlines like this, and boy, this matters. 300 locations. The union, yeah, ramps up stoppage during the holiday period. Hey, I want my latte, man. All right, everybody loves their holiday latte from Starbucks. 300 cafes. Over 5,000 workers, including Boston, my hometown. All right, we'll talk a little bit more about that, but we got Starbucks. And if they fill that gap from August, you're talking about $75. Stay tuned, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Ho, ho, ho. Welcome back, folks. And we got the market catching a little bit of a Santa Claus rally coming in on Christmas Eve. S&P's up by 20 points, 6,055. NASDAQ 100, we're up by 106. The Dow up by 16 right now, and the Russell barely in the green as well. We got Bitcoin up almost $4,000, 97,000 and change. Crude above $70 right now. Gold flat at 26.28. And all things considered, I put out the gold report yesterday, and with yields where they are, as we continue to rise where we are right now, we're pushing 4.57. Yeah, excuse me. No, 4.63. I was thinking 4.63. Yeah, that was yesterday, man. 4.63. As we hit 108.10 right now, 4.63, the yield on the 10-year. Remarkable strength when you think about, you jump over to the dollar. Okay, the dollar above 108. The dollar could be higher with yields where they are right now. This 108 level breaking above it, but we'll see if we can really catch a bid. You know, we got a high out here of 108.07. Look at, and we're sitting literally almost to the thousandth of a point. We're at 108.73. The high is 108.71. So you break away, 115 is out there. But we'll see. And then you look at gold. Do you ever get any dollar weakness, man? Gold, a little bit of a pullback on that dollar strength, but we are hanging out. It's kind of nice little flag formation forming. 26.28. We're going to break higher or lower. We will find out coming into 2025. All right, jumping back to Starbucks. So, yeah, you're talking about 5,000 workers. And, folks, I tell you, my mom is retired. She worked for Verizon. She was able to do that because she was a union employee. There's a lot of good things about unions as well. They go too far when you take it, and everybody likes the example of the car companies in Detroit, rightfully so, okay, and that bankrupted many of those companies. But you talk about unions, man, you want a livable wage. That's one way to get them, period. End of sentence. Yeah, an overwhelming number of the 10,000 company-owned stores remained open as usual, but guess what? You're talking about 300 locations, man. I mean, once the tide breaks, if you're a worker, you're seeing this. You know, 1 store, 2 stores, we always see those headlines. I'm like, oh, good for them. 30 people try to get it done, and many times they'll get defeated. Amazon's defeated them, right? But yeah, The strike was sparked by a breakdown in negotiations between the union and company leadership, which represents over 500 stores. So you got 300 there. But headlines. Unions like headlines when they're on strike. Excuse me. You jump over to video games. Marvel Rivals. I was like, I got to check out this game for Tommy. Now, I don't have an Xbox here, but I do have a PC. But nonetheless, released December 5th, Marvel Rivals among the top 5 games being played right now on PlayStation, Xbox, and the PC. You got people on Twitch, which is owned by Amazon. Yeah, you're talking about 100,000 people. Tommy loves Marvels. We'll have to check this one out. Early, it was written off as another clone of Microsoft's Overwatch, one of the biggest games ever. Overwatch sold 50 million copies, but the 2002 successor failed to retain its audience, and maybe this steps in. You got Wolverine, Captain America. You got a couple others in there as well. They better have Spider-Man. So you got 20 million people signing up for the game. Video games are remarkable, man. Jump over to Disney shares. Quite a roller coaster of a year for Disney. Disney trading up by 0.3% with the market right now. Jump over to some of the other streamers. Warner Brothers Discovery, negative today. Quite a banner year for Netflix. Breaking out of this uptrend channel that you started at 162 a couple years ago. We're almost pushing $1,000. Netflix shares flat on the session, up by 63 cents technically at $912.08 for Netflix shares. Yeah, and it's politics, but man, it ties into everything. And if you get a chance, folks, all I'll say is go read the House Ethics Report put out by the Ethics Committee that is run by a chaired Republican from Mississippi, okay? Go check out that report. It's 37 pages. I haven't read through all 37 yet. Yeah, we'll leave it at that. All right, what else have we got going on in this market as we got action till 1 p.m. Eastern time today? Yeah, you talk about Nissan and Honda. What else we got going on? Yeah, we talked about Marvel. We talked about the banks, insurance. Coffee. How about that one? Yeah. I've already had some coffee, and I'm going to get another coffee when I get on the air and Basil takes over in 15 minutes at 10 a.m. But you talk about it, man. Coffee's rally forces traders to seek alternative hedging plans. Arabica futures have jumped 70% this year, right? New ways to hedge with that type of volatility. Futures prices up 70% in New York, breaking the highest levels in more than 40 years. Yeah, you talk about it. For a trader with cargo on a ship, okay, margin calls can drain their cash quickly. Increasingly, they're turning to options and off-exchange solutions to avoid paying more collateral for doing business. Yeah, look at that run, man. Everybody thinks Starbucks is expensive, but it's going to get more expensive, man, when you look at the price of coffee accelerating above anything we've seen, and you were at a peak. Now, commodities ebb and flow, okay? As in, you really get some momentum on either sides, but traders need to hedge coffee when they transport it, okay? And when a trader commits to buy physical coffee, they usually sell the product, so they hedge themselves, right? As much as $7 billion of margin was called in the coffee market during November, right? Imagine that. Liquidity swaps for a fee. They can just do anything. Repurchase agreements. A lot of off-exchange activity where it's banks doing liquidity swaps or actually buying physical from the trade and selling it back to them later to free up some cash. There's a lot going on when you got coffee spiking there, but keep your eye on coffee coming in to 2025. 2025, man. Yeah, we take a look at Bitcoin. Yeah, we're obviously light on some fundamental stories on Christmas Eve, but Bitcoin trading with the markets right now, a little bit of a bid back to where we were on Friday, 97,212 for Bitcoin. Banner year for Bitcoin. We might jump over to MicroStrategy. Up 4% with Bitcoin, 345 right now for MicroStrategy. We keep our eye on Apple, up $1 to 256. Remember, Apple only about $6 away from $4 trillion. Microsoft shares 0.2%. Amazon catching a bid. Look at that, up by 1.3%. Did you get all that Christmas shopping done? Well, it's probably too late on Christmas Eve to hit up Amazon. I say that, but maybe you get that 2 to 4 hour delivery. Hey, look at Amazon, up by 1.3%. Walmart, quite the pullback yesterday, man. Not sure what was going on to that degree. Quite a pullback. One of the worst days they've had in a while, but they're clawing back some of that. Walmart, up by 0.9%. A banner year for Walmart as well. Look at that year. How about 51 to 96, almost doubling the value of Walmart shares as consumers seek value during inflation. Stay tuned, folks. One more segment. Don't go away. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. S&P's right now up by 21 points, 6,057, just off the session highs, up by about 1/3%. NASDAQ 100, we're up by 0.6% right now, 21,879. Dow is flat. Russell off by 5. We keep our eye on yields as we got the 10-year above 4.6, sitting at about 4.63. 4.63, the yield on that 10-year. And we check out the dollar, 108.09, holding above 108. Dollar strength, King dollar, coming at you, man. We check out some of those stocks. Yeah, Amazon continuing to run, up by 1.4%. Yeah, Walmart clawing back some of yesterday's losses, up by more than a full percentage point. Let's check out some of the other retailers on Christmas Eve. Target shares down by 0.3%. Been a tough year for Kohl's, man. Yeah. At one point I was looking at Kohl's. I'm not looking at them anymore, though. This thing, maybe if you find a bid, you find a reversal. This way, things on a one-way path right now to negative prices. And you take a look at a longer-term chart of Kohl's. Watch out, man. Back to 1997. Remarkable. On the flip side of that, TJX. How about that chart? Right, 1997, you were at 3 pennies. You're at $122. Just some context of Kohl's versus TJ Maxx. But yeah, quite a run for them. They kick off the year at 90, and you're at 122, up by almost 40% this year for TJX. Check back in on American. Some of their flights grounded this morning for quote-unquote technical issues, down by 1.4% for American. Target slightly in the red right now, down by 0.3%. All right, folks, stay tuned for our man Basil Chapman. Listen, have a great Christmas. Have a safe Christmas. Have a great holiday. Take an Uber. We'll finish it up with Uber. Remember, everyone loves a cocktail. Not everybody, but if you do love a cocktail during the holidays, don't drive, folks. It's too easy. Life's too beautiful. We'll see you back here on Thursday. Stay safe out there. Take an Uber. Uber down by 1.3% this morning. Have a great Christmas, everybody. Thank you so much. Stay tuned for Basil. We're live until 1 p.m. Eastern time today, folks, with the market. And then we'll have a great Christmas. Thanks so much, folks. We'll see you after Christmas. Stay tuned for Basil.